In this final market update for 2024, we're going to be updating our analysis in the various instruments that we've been watching and also taking a quick step back to consider what we can expect from the cycles as we enter 2025. Starting with the S&P 500, I pointed out in the previous market update video that we have, of course, an 80-day cycle trough over here at the beginning of November, and price crossed up above the 20-day FLD, which is our favorite FLD to watch in these market update videos, having formed a 20-day cycle trough over here and thereby generating a target over here. That target is, I think, just above 6,100, and I don't think that target has quite been reached. As you can see, in the past 2 weeks, we recorded the previous market update on this bar over here. Price has been steadily grinding upwards. It hasn't even come below the 5-day cycle FLD, and so we do not as yet have a confirmed peak. However, the 40-day cycle trough is expected, as you can see from this rather straggly nest of lows. That 40-day cycle trough is expected soon, and we would usually expect price to drop down below the 20-day FLD on its way to forming that 40-day cycle trough. But as time is running out, it is also possible that that 40-day cycle trough might turn out to be a subtle or straddled trough occurring only at the level of the 20-day cycle FLD. And so those are the FLDs that we are watching as the market forms the 40-day cycle trough. Taking a step back to consider what we might expect for next year, this is the longer term analysis that we've been looking at. We have a very important 9-year cycle trough over here in December of 2019. Here is the strong move down that we had to form the pandemic trough in March of 2020. You can see that has been phased as an 18-month cycle trough in this particular analysis. The important thing, of course, is that we had a 54-month cycle trough over here in October of 2022. The 54-month cycle is therefore still rising, and it is expected to form a peak sometime early next year, as you can see from this semicircle for the 54-month cycle. The 9-year cycle, according to this analysis, should have peaked sometime in about 2023 and should be now turning down. It is not unusual, of course, when a longer term cycle peaks that the market keeps moving up, because those longer term cycles tend to move fairly slowly. It is also, of course, possible that this is not only a trough of the 9-year cycle, but also the 18-year cycle, which would certainly explain the continued bullishness of the market. But focusing on the early part of next year, you can see that we have another trough for the 18-month cycle that is expected in about March or April of 2025. Here is the nest of lows, a little bit straggly, for the 20-week cycle expected in about January of next year. Measuring from the October 2023 trough forward by 546 days, which is the average length of the 18-month cycle discovered by Hurst 50 years ago, you can see that we are expecting that 18-month cycle trough at about the end of April. And so we will certainly be watching for price to come down into an 18-month cycle trough early next year. FLDs that will be of interest when that 18-month cycle trough forms will of course be the 18-month cycle FLD and also the 40-week cycle FLD we need to keep an eye on as price potentially moves down into that 18-month cycle trough. In the Nasdaq, in our previous market update, which was recorded on this day over here, we were looking for price to cross up above the 20-day cycle FLD. It did, of course, do that, and we therefore generated a target to the upside, which was easily achieved and has now been exceeded. And so the Nasdaq has been more bullish, if you like, than the S&P 500 because of the fact that it is surpassing its targets to the upside. We have a slightly different analysis situation in the Nasdaq to the one in the S&P 500, which we will take a look at when we zoom out in a minute to consider what is expected as we go into the new year. The important thing is that we are expecting a 20-week cycle trough towards the end of December, about 40 days earlier than that trough is expected in the S&P 500. It is likely that these troughs will occur at the same time in these two instruments, and so one or other of these analyses needs to win out at the end of the day. But at present, as you can see as we display our shorter FLDs, the Nasdaq is steaming upwards, and it hasn't crossed below even the shortest FLD, the 5-day cycle FLD on this particular chart, to indicate that a peak is in place. And so we need to watch those FLDs in the short term as price turns down and comes into that 20-week cycle trough. Taking a step back in the Nasdaq, we can see that we have a slightly different analysis, but it effectively tells the same story. We have again our 9-year cycle trough at the end of 2018 in December. Here is the pandemic move, the strong move down and then bounce straight back up again, which in the Nasdaq has been phased as a minor trough of only 20-week magnitude, and the 18-month cycle trough has been positioned over here. When you get that kind of fundamental interaction where a news event distorts the cycles, that kind of thing will often happen, where a more prominent cycle trough is actually displaced either before or after the price trough that has been influenced by the news event. This analysis of the Nasdaq also has an unusual positioning for this 18-month cycle trough over here in 2022, and it has a 54-month cycle trough over here in October of 2023. It's a slightly unusual analysis situation during this period of time, but it in fact resolves itself into an analysis situation that is very similar to that in the S&P 500, with a 40-week cycle trough over here in August of this year. And if we zoom in, you can see that we have a very similar outlook going into next year. Here you can see the 18-month cycle nest of lows expected slightly later in the Nasdaq, in about May, as opposed to the end of April. It is very likely that the S&P 500 and the Nasdaq will form this 18-month cycle trough at the same time. Here is the 20-week cycle trough. You can see that we are expecting towards the end of this year, but the important trough to keep an eye on is, of course, this 18-month cycle trough over here, expected in about May. In the Australian stock market, the ASX, in the previous market update recorded on this day over here, we were looking at the 40-day cycle FLD. I pointed out that we were expecting a 40-day cycle trough to occur in about the middle of December, and that, you can see from this nest of lows, is expected to form about now. I pointed out that this 40-day cycle FLD is expected to be crossed down by price as price moves down into the 20-week cycle trough that is expected early next year. Notice this very displaced circle and whiskers for the 20-week cycle, indicating that, of course, the shorter cycles in this analysis have been stretching. We always need to sit up and take notice when we see this kind of thing on our charts, a circle and whiskers hovering above a nest of lows. It does indicate the possibility that the 20-week cycle trough is going to form here as opposed to in only 40 days' time. And so we need to watch the way in which price interacts with this 40-day cycle FLD to see whether price does succeed in crossing down below it on its way to the 20-week cycle trough, or is it going to provide support, in which case we should consider that the 20-week cycle trough has formed early. As a matter of interest, the 20-day FLD was crossed below over the weekend, as you can see over here, and that generates a target of about 83.50, which at this point would bring price down to about the level of that 40-day FLD, and at that time we need to watch to see how price reacts. Taking a step back on the ASX, you can see that I'm working with a non-standard nominal model. In other words, not the default nominal model that we usually work with as defined by Hurst 50 years ago. The reason for that is because the Australian market indicates, to my mind, a fairly clear 6-year cycle. And here you can see the semicircle for that 6-year cycle beating a fairly regular rhythm over the past 30 years. This is an analysis that has worked fairly well for me when tracking the Australian markets recently, which is why we have been using it here in these videos. This orange cycle is then not a 54-month cycle, but in fact a 3-year cycle, and the yellow cycle is a 15-month cycle as opposed to an 18-month cycle. You will notice that here too the pandemic trough in March of 2020 is not in fact the longest cycle on the chart as might be expected from that dramatic price move, but in fact the 6-year cycle troughs have been positioned over here in 2016 and then in 2022. Zooming in to see what we can expect from next year, you can see that similarly to the US markets that we have just been looking at, we have an 18-month cycle trough, or the yellow cycle trough, expected about here in April of next year. Of course, that is only a 15-month cycle trough, but in my opinion it is the same cycle between the two markets. They merely have slightly differing wavelengths. However, this cycle trough should also be synchronous with this longer 3-year cycle trough, which you can see according to this circle and whiskers is expected later in the year. It will be interesting to see as we move into next year how this nominal model holds out. Experience has taught me that markets very often tend to return to Hurst's nominal model, although the Australian market has followed this nominal model for many years, and so it will be interesting to see what happens as this trough forms. But similarly to the US markets, our focus is definitely going to be on this period of time next year in April, where we are expecting this next important trough to form. In our previous market update, in which we looked at the Nifty, and that update was recorded on this day over here 2 weeks ago, we spoke about the fact that price had just crossed above the 20-day cycle FLD, thereby confirming the trough that we were expecting in the Nifty. You can see that according to this analysis, it has been phased as an 80-day cycle trough. However, this circle and whiskers for the 20-week cycle makes it very possible that this could in fact be the 20-week cycle trough. In terms of our trading decisions, it makes very little difference at the moment because of the fact that price crossed the 20-day FLD and generated a target to the upside. Let's quickly zoom in to take a closer look at that. The price cross occurred, as you can see, over a weekend, which is something that we do often see happening, and it generated a target over here just below 25,000. That target was, I believe, only just reached over here last week on Thursday. Of course, what we are expecting now is for a 20-day cycle trough to form, and that trough is expected to form at about the level of the 20-day cycle FLD, where the FLD should provide support to price as the 20-day cycle trough forms. So let's zoom out on the Nifty too and see what we are expecting going into next year. In the case of the Nifty, as you can see, the pandemic trough that we have been identifying as a less important cycle trough in the other markets has in fact been phased as a 54-month cycle trough. This is a debatable point, and I am not absolutely insistent upon it. However, it does work fairly well for this analysis. As you can see, we have had two 18-month cycle troughs since then, with this trough over here in 2022 and with this trough in 2023. That gave us a very short 18-month cycle, as you can see over there, but it serves to remind us that the principle of variation is alive and well. Now here is the important thing about the Nifty. In the Nifty too, we are expecting price to come down into a trough in about April or May of next year. But according to this analysis, it could be not only a trough of the 18-month cycle, but also a trough of the 54-month cycle. However, we need to consider that 54-month cycle placement with a pinch of salt. In other words, we're not going to take it too seriously. But let's zoom in just a little bit to take a closer look at when that trough could be expected. Here you can see the nest of lows for that 18-month and potentially 54-month cycle trough. It is a fairly spread out nest of lows, but it is clearly centered over here on about April or May, which is exactly when we are expecting those similar magnitude cycle troughs to form in the US markets. However, I would like to point out some uncertainties in this analysis. Notice this 40-week cycle trough, which is positioned over here. We had this strong, very high volatility bar that occurred over here in June, which has been potentially phased as an 80-day cycle trough. We have a very long 80-day cycle and a very short 20-week cycle over here, indicating that this analysis might not be entirely reliable. Therefore, we need to stay on our toes. We have seen a good bounce out of this cycle trough, and my recommendation would be to keep riding this bounce until we see evidence of a peak forming, at which point we would be looking down into the next 18-month cycle trough. In gold, in our previous market update, we were looking at price reaching up to the target generated by price crossing over the 20-day cycle FLD, having formed a 20-week cycle trough over here in the middle of November. Price did not reach that target, which was at a level of about 27.50. Instead of reaching that target, it immediately collapsed and has been moving sideways for about 2 weeks. We are expecting a 20-day cycle trough to form. As you can see over here, it is possible that trough formed here. It is also possible that it actually formed over here. If that is the case, then the 40-day cycle trough that we are expecting over here would in fact shift earlier in time. But this failure so early in the 20-week cycle is fairly worrying. Price has become a little mangled up with this 20-day cycle FLD, and we are not getting any clear signals on this scale. We would certainly expect the 40-day cycle trough to form probably within the next week or two, and we would expect that cycle trough to form definitely above the level at which the 20-week cycle trough formed. But let's take a look at the longer-term picture to see what we are expecting as we move into next year, because there are some worrying signs in terms of gold's price. Focusing initially on the trough-based analysis, in other words, assuming that the cycles are synchronized at their troughs, which does often turn out to be true in gold, although we will take a look in a moment at the peak-based analysis. But for now, the trough-based analysis shows us that we had the equivalent of a 9-year cycle trough over here in 2015, and then we had a 54-month cycle trough over here in September or October of 2022. We then had a very short 18-month cycle, according to this analysis, and our next 18-month cycle trough is expected, of course, in about the middle of next year. The 54-month cycle is still pushing upwards, as can be seen from this semicircle. It is expected to turn around at about the middle of next year, however, and start giving us a downwards movement into the next 54-month cycle trough, which is only expected in late 2027 or early 2028. And so we are certainly entering 2025 with a bullish mood according to the trough analysis, keeping in mind that we need to watch out for this 18-month cycle trough occurring in about the middle of the year. However, if we switch to take a look at the peak analysis, a slightly different picture emerges. And if we zoom out for just a moment, you can see how the peak analysis in gold has proved fairly reliable. In my opinion, the peak analysis works very well for the longer term cycles. But generally, when looking at the sort of time frame we look at in these market updates, in other words, looking forward only a few weeks, the trough analysis proves just as good, if not more reliable, than the peak analysis. I'm not sure why that is, but it tends to be true most of the time. The worrying thing that this peak analysis warns us of is the fact that a 54-month cycle peak has potentially just formed in gold. You can see how regular this peak analysis is. In other words, it is working fairly well at the 9-year cycle level and at the 54-month cycle level. And so we should certainly pay attention to that 54-month cycle peak. If we zoom in just a little bit, we can see in greater detail the way in which the past 54-month cycle, using an analysis process that assumes synchronized peaks, has played out. We had a 9-year cycle peak over here in 2020. Then we had an 18-month cycle peak over here in early 2022. A slightly questionable position for the next 18-month cycle peak over here in early 2023, giving us a very short 18-month cycle, as you can see. That is the one thing that gives us some hope that the 54-month cycle peak may still lie ahead of us. This short 18-month cycle over here might turn out to be incorrect. But as you can see, the 54-month cycle peak has been found in this analysis, and it occurred over here in November. If that 54-month cycle peak turns out to be true, then that certainly gives us a reason for the lack of bounce out of the recent 20-week cycle trough, which we had over here. And it warns us that we need to look out for falling gold prices. However, I'm not giving up on gold just yet. We are going to watch the bounce out of the 20-week cycle trough, but we need to be on our toes for the fact that things might turn bearish for gold going into next year. Finally, Bitcoin, of course, made headlines last week with the fact that it exceeded its $100,000 level. It poked its head up above the $100,000 level and is now fluctuating around about that level. That is, of course, a very psychological level. It was an obvious level for the price of Bitcoin to reach. We need to now keep an eye on all of these FLDs because Bitcoin should come down and form a 20-week cycle trough early in 2025. However, given the recent bullishness, it is not required to drop very strongly into the beginning of 2025, but as price crosses below these FLDs, we can generate targets to the downside, none of which are available yet because price is above all of these FLDs on our chart. Taking a step back, however, we have another warning message in Bitcoin. First of all, considering our trough analysis, you can see that we have this 20-week cycle trough expected here very early in 2025. And then we have this 40-week cycle trough expected over here in about May or June of next year. The next 18-month cycle trough is only right over here in 2026. But now let's take a look at a peak-based analysis. In other words, assuming that the cycles that influence Bitcoin are synchronized at their peaks. It seems likely that the price of Bitcoin is influenced by cycles that are synchronized at their troughs, and this trough analysis has proved very reliable for us over a long time. However, we do keep an eye on a peak-based analysis because it is possible that Bitcoin, being a fairly new instrument, could be influenced by cycles synchronized at its peaks. And here is the warning message. You can see we have a nest of highs for an 18-month cycle peak that is sitting right above us as price is hitting the $100,000 level. That is a warning that a peak is potentially imminent. And so we certainly need to focus on those FLDs to watch for signs that a peak of potentially 18-month magnitude is forming in Bitcoin. I do hope you found this market update useful and interesting. Thank you for your support through 2024. I wish you a wonderful festive season and new year and look forward to seeing you in 2025.